Welcome back, comrades. It is a beautiful day in Mother United States Soviet Union. Welcome back, guys. Alright, there's a lot to talk about. I'm going to cover charts first, then I'll talk about Bitcorn and some news and whatever else is going on. This brave new world. Very brave, very new. First of all, not financial advice. Consult your licensed financial advisor. I'm not a licensed financial advisor. This channel is more about trading, learning how to trade, listening to my opinions, which may be right, may be wrong. Stocks, equities, bonds, currencies, all extremely volatile, all extremely risky. Do not invest anything you're not willing to lose or lose sleep over. Don't use margin. Don't invest. Don't play around with options too much. Don't. It all depends on your experience, right? Your level of experience. If you don't have 7-10 years experience trading, suggest you don't use a margin account. Don't leverage up with leverage ETFs, and then of course options. Because lately I've noticed the FOMO, the fear of missing out. It's very strong with you guys, with everyone. It's super strong, and that's when everyone gets wrecked. See, the name of the game is to stay in the game. Because if FOMO takes a hold of you and you keep chasing it all the way to the top, when the correction comes, it's the elevator shaft down, and then you're stuck holding the bag or your account blows up, and then you're done. You should always be more afraid of losing money, not the fear of not becoming rich. Because once you lose it, it's gone. And then your the odds of you making it back, who knows? So that's why you don't let FOMO, which is an emotional, it's an emotional event, right? You see the price going higher, people making money, this and that. But you have to remind yourself, only a very small percentage of the people actually ever walk away with money. Because it takes a whole lot of people to lose their money for you to make a whole lot of money. It comes from other people. So that's why I personally I'm more of a contrarian. I don't follow the herd. Sometimes I follow the herd, but you need to know when to stop or to jump out before the herd goes off that cliff, right? And that applies with everything. I mean, 2020 was a great example of herd mentality, of how the masses, right, just, they look around and it's a survival mechanism. Oh, they're all doing that, so I have to, put something on my face. Like, you guys understand. You guys are smarter than the average person. Anyways, I posted some calls on TradingView. I've never done that, mainly because I don't care, but maybe I could gain some traction, some following. So I posted, I called the top pretty much to the day on Bitcorn, but they pulled it down. They pulled this one down. I guess they didn't like that, but I put it back up like 2 days later. It doesn't matter. I still put it out in the alerts room. Well, it actually wasn't the top. The price went a little bit higher. A lot bit higher, actually. 20% higher. But it happened very quickly in just like 4 days. And then it finally dumped. So I'll talk about Bitcoin a little bit later. Let's talk about the markets right now real quick. So volatility is still down there around my blue equilibrium line. The dollar, it stopped falling. It's at the 90 handle. The market went a little higher today and then sold off right before the close. Today is Friday. No, it's Thursday, the 14th. Um, Gold sold off yesterday, big time. It's at 1846. Everyone, all the gold bugs were jumping on it. Like, this is it. It's breaking out. It's a bull flag. This is it. Everyone all in, and they got slammed. And yeah, a lot of the mining stocks have been going up by a lot in the past few weeks, which is fine. Which is fine because I'm still waiting for a big correction. I mean, you guys don't know my strategy for the private group, for the people who aren't lazy and actually watch that intro video that I told you to watch when you first joined on how I am playing this bull market in metals and hedging against the stock market. About 60, 65, somewhere around there percent of my entire capital, let's say in one account, is long individual mining stocks, just in case if inflation just happens all of a sudden, because it can happen at any time. You could go to bed like on Friday night, uh, markets are closed all weekend, something happens, and then Monday morning the dollar lost like a quarter, like 25% of its value, and then your mining stocks are up all like 5, 10x or something crazy. But so I'm always holding long, and then there's tax advantages for that as well, right? You don't want to get hit with cap gains. So I hold long majority of my portfolio in mining stocks. Let's say around 60 to 65%. And then I play around with 20%, meaning I'll take 20%, maybe 25%, and I go long on leveraged ETFs and other ETFs, and I trade that. And that's how I really grow my net worth, right? My portfolio, my account. And then I always have 5 to 10% in cash. And these are all defensive mechanisms, and it's also managing risk, because my macro view is metals are going up. It's fundamentally there's more than enough evidence where I'm all in on that. Now, that doesn't mean it's the only thing I invest in. I do trade other stocks sometimes, and I'll even short the market, and I'll go long the market sometimes. It doesn't matter. And I usually do that through ETFs, no individual stocks, but sometimes I do individual stocks as well. But I always have dry powder on the side, just in case something happens that I didn't see coming, and then I can take advantage of the opportunity. Or you always need cash in your account, because when you get a drawdown, right, and you have a margin account, then your account starts going negative. And then it'll eat into your cash, into your dry powder, which sucks. And that's another reason why I always throw on the hedges. And, sometimes I throw on small positions to hedge a large account, but it's like maybe I'll throw a small size position, right, on an option to hedge my entire account or my long positions that are currently long. Anyways, with gold and silver popping in the last few weeks, mainly because of this new administration and the promise of uh, endless money printing, they've been going up. And I've been taking, my account's been going up. That doesn't mean that I bought in on leveraged ETFs. And it doesn't mean I went long with my trading allocation. So you have to understand, I'm always long mining stocks. I'm never all in or all out. I'm playing it with, so let's say I have $100,000. 65,000 is, let's just make it simple. 60,000 is long, individual mining stocks, and maybe one or two ETFs. And 25,000 of the 100,000 should take it to about 85,000 total. But the 25,000 of it is strictly for trading. And sometimes when the bottom's in for metals, then I will go maybe with 15,000 or 20,000 of that entire trading capital long, because I know it's a high probability trade. I will still have another like 5 to 10,000 in cash. I will always have that, right? So that's how I personally do it. I don't know. It's not right for everyone, right? I actually trade. I swing trade. I do not day trade, because day trading is, you're just gonna get caught up in the noise and you're gonna make mistakes, in my opinion, and eventually you'll lose it all. Or just go ahead, go day trade, see how it works out for you. There are times that I do trade like a lot in like a week or two, but it's only when I see big opportunities. Right now, the trend has been the same for over 9 months. So why would I jump in now or do this or do that? Lately, I have put on hedges to my account, and I'm short the market with inverse ETFs. Because I feel that I really need to, just in case this market has a real hard correction, which I still believe is coming. All right. So, again, I still believe the market's going to correct in a really big way soon. That's going to take metals down. It doesn't, like, I know the FOMO is there, but it's going to take it down. It's going to take down Bitcorn as well. It's going to be margin calls. The institutions have to sell everything. They hit one button, they sell everything, including your supposed safe haven hedges. And that'll be a short-term correction for metals, even maybe possibly for Bitcoin and the cryptos. And then after that, they're going to come in with more stimulus, a lot more, and then they're going to go back up, and it's going to go into a raging bull market. Nothing has changed literally in 5 months. I've been saying this for 5 months. And it's like, people will just keep asking me the same questions over and over again. Just because it hasn't happened yet doesn't mean it's not going to. Matter of fact, the more time that goes by, the more likelihood it's going to happen sooner. So stop asking me questions. It just means that you can't handle your emotions, or you just don't understand. Also, rates, the 10-year yield, it's shooting up. It's going up. Why is that? Because the bond market's smarter. It's 10 times greater than the equity markets. They know that they're going to do more and more stimulus, endless amounts of it, matter of fact. And yields need to go up because nobody wants to buy bonds. You have to understand right now, everything is in a bull market. From all of the monopoly money, right? Everything. Bond market's in a bull market. It's been in a bull market for decades, like 3 or something. Equities, stocks, all in a raging bull market. Metals, even that went into a bull market. We hit all-time highs, 2, 3, 4 months ago, whenever that was, whenever I took profits on my leverage ETFs and ETFs, right? Even on some individual stocks that really went up. So you have to understand that the 10-year yield, when this thing spikes, it's going to dump the stock market. It's going to do it. Once it goes to like 1.45% and goes a little higher, the stock market's going to correct. And then that's going to cause metals to correct and everything else. It's literally that simple. Because what are yields? Yields are interest rate on all the debt, bonds, public, which in turn turns into private as well. It affects the private market as well because the banks are the ones who, for the most part, buy the bonds. The the, the Federal Reserve, which is not federal, it's private, is owned by who? Well, who are the board members? They're from all the big branches, all the big banks. Um, it's funny because the names are like there to hide it from the normies. Anyways, so when the rate goes up, the yield, the interest rate goes up, it starts forcing all the debts outstanding to come due all over from mortgages to commercial real estate to cars to credit cards, everything, right? What does that do? That forces people to go under in massive defaults. And it makes, what else? It makes financials really weak in the stock market. And it just, there's algos out there that will get triggered if this goes to a certain percentage on the 10-year. And it'll cause a correction. And it's literally that simple. And it doesn't matter how much they print. Yields going up is going to cause a correction. Now, what they're going to do is print more, and then they do yield curve control, which is some central bank comes out and buys bonds to push the yield back down. But the reason the yield goes up is because they're printing. So it's like a death spiral. It's a self perpetual death spiral. And that's why they say the central bank's stuck in a corner. The more they try to keep the markets up and manipulate everything and keep the interest rate down on bonds and all the debt outstanding, the more they break their own rigged system. And they will be the undoing of themselves. And that's why this can't continue forever. And I guarantee you, in the next 4 years for this admin, it's shit's definitely going to hit the fan. It might even happen this spring, this summer. It might happen this month. I don't know exactly. I did put on positions for this month and next month and the month after that. And if I have to, I'll keep hedging because I do not want to be caught with my pants down, I guess, when this market corrects, because it might be the big one. You never know when it's the big one. Like, I'm assuming when it corrects, it's going to be a hard correction, and then they're just going to come out with so much stimulus, they'll get it back up. I don't know if it'll make a new all-time high, the markets. It might not. It might just be like a bull trap, a giant bull trap that lasts a while, maybe a year. But we'll see. Either way, my TA analysis tells me that we're due for a correction. The 10-year yield is telling me that that's going to pop this. It's going to prick this. All right. So I'm not technically with my trading allocation, my allocation towards trading. I'm not throwing that right now. I'm not all in or going bullish on mining stocks. Not right now. I'm still waiting for that giant dip buying opportunity that'll probably be short-lived. Same probably pretty much goes with Bitcoin. I'm going to be honest with you guys. I'll talk about that in a second. Let's go to the next chart. Wait. Yeah. Hopefully my sound isn't horrible. Because my software here pretty much went back to default, and it took me like hours and hours to fix it. Alright. Here's like all the indices. Nasdaq E-mini, S&P 500 index, FANG index right over here. Here's the Dow Jones, Russell 2000, Vanguard International. I mean, if you look at all of the oscillators for all of them, they've way overextended. These are weekly charts. And we just passed a bunch of 9 cells. For the weekly, using the TDI indicator, which has been probably one of the best I've ever used. Isn't always accurate, but it is enough using other indicators and paying attention to fundamentals and what's going on in the world. You throw it all together and you are better than any algorithm or anything. Just look at the moving averages. Well, for the Russell, it doesn't look that bad, but the spread between the moving averages is the gap is fairly wide. Also, if you look at the fear and greed index, right? This week, I mean, the greed is strong. It's weakening though. This entire month, it's been strong. The greed has been off the charts for months now. For months. And I told you guys, I think a lot of boomers, as soon as this market falls or has a correction, they're going to panic. Dow Jones has been a very strong buy. I believe the greed for the Dow and the transports and all that lately, since this election, right, is because, in the past few days, is because they're talking about infrastructure spending, which is to juice the economy, to kickstart it back up, which it will. It will. I do think the economy is going to look probably better in the summer. It's going to look better. I'm not saying it's going to be. I'm not saying it's real economic growth. I'm just saying it'll be like another sugar high. And but I do think there will be a correction this winter, and then in the summer and next fall, they're going to be doing massive infrastructure spending, and they're going to juice this economy, and they're going to spend trillions. They're going to spend another 10 trillion. Who knows? And that's fine because we're going to profit massively from that, right? But right now, I mean, the greed index has been off the charts for months. Okay, it's that simple. What else? NASDAQ Composite. I keep saying, the way these big tech companies go, they will pull the rest of the market down with them. And I'm still expecting a decent correction. At least a retest of the 50% reach. Well, technically, that would gotta move it up a little higher. At least a retest of the 50, maybe even the 61.8 Fib retrace. Anywhere from 10,800 to like 10,000. Can it be a way more severe correction? Absolutely. Because there's nothing but air down here. There's really no support. There's a little bit of support around the 11, 10,000. But maybe even, yeah, I mean 11 to 10,000, there's some support around that area. But if it gets past that, we can see a very, very serious correction. Like back down to the 38.2, which would take you back to 9,300 on the NASDAQ Composite Index. But I will monitor this and make more videos as that happens. Russell 2000 looks ready for a nice correction. Matter of fact, the price tends to, right before, let's say, the 200-day and the blue line, these moving averages cross, the price likes to fall into, like literally the candlesticks, move towards one of these intersects, right, with the moving averages when they cross. The price likes to, like, go towards it and then rebound and reverse. So what I'm saying is, I've seen that a lot in my days of trading. It's like, it's weird, but it does it. So, fall towards the moving averages as they cross, which this is actually a bullish cross over here. It's like a golden cross. And then rebound back up into spring, summer of 2021 for the Russell 2000. And I wonder if they're going to try to lock us down. They are, because they love it. They need to, destroy you mentally. A lot of people are spiraling these days because Orange Guy, threw in the towel. I posted that other video. And they're like, oh my God, we're going to go into like camps. No. They already exist. They don't have to build them. And they're the cities. They're the smart cities. Those are the camps. Your cell is your home or your apartment. And then when you try, and then who are the guards? Your neighbors. Your neighbors, where NPCs are brainwashed, right? Yeah. So that's why I'm like, if you want to try to look to exit out of these densely populated areas, because they're just going to be nightmares. All right, I digress. Let's get back to charts. Here's the S&P 500. This is a monthly chart. Just, going back to 1971, when we were completely taken off the gold standard. Had quite a ride. Yeah. Oh, I forgot to bring up that picture. On the average empire's last 250 years, the U.S. right now is 245 years old. And I guarantee you the ruling class saw the writing on the wall back in the 70s, and they're like, all right, well, let's just have a good old time for the next few decades towards the tail end of this. And they're like, yeah, we'll just go off of metals, use the petrodollar as long as we can, and just, have the greatest party ever in history. Because that's what this chart tells me. The greatest party in history. The greatest time for boomers. Well, guess what? Whenever you know what, that's why they're doing all this. That's why it's a divide. The red team, blue team fighting each other, this and that. It's just a giant psyop, mainly because the people at the top are afraid because all the promises, right? The pensions, retirement, it's not there. It doesn't exist. I mean, maybe they'll write you checks, but it's not going to be worth anything by the time you get it. And everyone's 401k, IRA, everything. It's going to be worthless or worth a hell of a lot less soon, real soon. So that's why we live in clown world. That's why they push it and make it happen, because it's all about control, because they're afraid. Oh, and I didn't bring up my meme. If you go to my Instagram or Twitter, I made that meme with the line. I don't even know if the grammar's correct. I'm essentially illiterate. It doesn't matter. I'm still successful, right? That's what. See, writing's not my. It's not my thing. Pictures are, I guess, art. Like I can actually draw really, really well. I can draw a human face. I don't. I barely ever draw. I just have autistic skills, right? I'm joking, but not really. Uh, I have high pattern recognition. That's why I do charts, and it's also I I do that for the news cycle and what's going on. I have a good, I can connect the dots, and that's my thing. That's my skill that I guess I was born with or something. Everyone has some strong attribute about them, and you need to exploit that as much as humanly possible, or don't take it for granted, right? Anyways, what I see here is when in Rome, pretty much. When in Rome, buy RVs, hot tubs, McMansions, eat cheap food, take out debt. Everything's going to be fine. It will eventually all come to an end. Again, I said I wouldn't be surprised. I don't know if we're going to make a new all-time high ever again once we have this correction coming. But it wouldn't surprise me either way if we did have another all-time high, because they're going to just keep printing until the world literally says, okay, enough's enough. And eventually you're really going to see prices in the grocery stores just explode. Like one egg is going to cost you $1. All right. So, what else? And the inflation's probably really going to take off when they come out with UBI. Now again, where's the jobs data? Something like 20 million. So jobs data came out today as well. 965,000. A million people filed again for unemployment claims last week, up from 784,000. This is like it's turning into around, give or take 300,000 to 400,000 from a million every week are just filing for unemployment. Okay? And, if you actually if you look at the U6 unemployment, because the way they basically lie with statistics, because there's lies, what's the saying? There's lies, damn lies, and then there's statistics. Well, that's pretty much what the central banks do with their data. And I don't want to get into it, but we pretty much lost what? They say the unemployment's like around 15%, somewhere around there. So what you're telling me is unemployment jumped over like 23% in midsummer, and then it just fell back down within a few months to about 12%. Yeah, I mean, I get it. A lot of people did go back to work, and guess what's going to happen? They're not going to be needed. The economy is not coming back anytime soon. And the gray area in the background is recession, right? Now look at this. Look at the unemployment spikes in those previous recessions. Look at this one. Now, you know what's funny? They still haven't even admitted that we are in a depression. How insane is that? Unbelievable. Anyways, well, it was an election year. So, the real unemployment, oh crap. So the real unemployment, U.S. economy loses 20.5 million jobs in April, raising unemployment rate to 14%. Okay, as of April. Well, listen, before 2020, I used to talk about unemployment numbers, and this is just off my head. I'm probably wrong. No, I'm going to be wrong for a fact. I just don't know at what extent. But the total employment level of 133 million fell to its lowest since June 1999. So, total Americans before this crisis that were working full-time jobs, or probably part-time jobs as well, they were being counted as full-time jobs. 133 million were working. There's 330 million Americans. So 1/3 of them had full-time jobs. 1/3. Everyone else is retired or children or not working. Well, we just lost another, what? Probably, I'll say 30 million out of that. So less than 1/3 of the total population in the country have jobs right now. And that's going to get worse. Even with all the money printing and juicing, infrastructure, it's going to bring some jobs, but not as many. I mean, we have, some very advanced construction machinery these days. You don't even need that many people working. And those are high-skilled labor jobs, by the way. But, they're probably going to hire a lot of people as well. You still need people to deliver things. There's just all sorts of smaller jobs that'll be created from building bridges to nowhere and building more highways or infrastructure, whatever, right? But as of right now, today or yesterday, what should I call them? I'm just gonna call them B, okay? Because the algos. I don't want to trigger anything. If you say too many certain words, then your channel gets hit. So our boy Blue, let's just call him our boy Blue from what was that movie? You guys know what I'm talking about. Our boy Blue, with Will Ferrell, a hilarious movie. When they go back to college, something like that. Anyways, um, put in the comment section. He's already talking about a 1.5 trillion, uh, just another, bill coming out soon. Like probably as soon as he swears in. And, the market got a little excited about that. It's still not going to be enough. We're still going to get a correction. And this is to dole out some more checks to the public. And you're thinking, well, that's going to keep the market going higher for a few more months. Yeah, but I think earnings that'll come in a few weeks are going to be really bad. And I know fundamentals don't matter anymore. It's all about the stimulus. But, I mean, listen, it's been a 9-month rally. And it's been an insane rally. It just needs a correction. That's all it is. Just a very strong correction. From the March low, the S&P 500 index has gone up. And it was a bubble before 2020. Now it's a hyper bubble. It's gone up 75%. An index. This is the S&P 500 in 9 months. That's unheard of. It definitely broke records. I don't know, maybe in the past it's gone up that much, as you know. But the difference is from the past to now is that this market cap is like 1,000 times larger. And you know how much more money it takes, how much more volume, liquidity it takes to move up a market this size that is this big already? I'm just saying, a nice healthy correction would actually do the market good for the next couple of years if they want it to go even higher. So, and again, like I said in my previous videos, they need to let it correct so the dollar catches, you know, catch its breath basically and rebound, and the yield on the bonds is also going to cause this, and I don't think they could fight that, or I don't even think they should. They should just let this correct for a couple months. Because if the market keeps going higher right now, then what you're going to get is the final blow-off phase. And by 2022, I mean, the stock market will probably be crashing. So what they want to do is create some support, because they all have chartists as well, in this area, right? And then have the huge parabolic blow off top later in 2022, 23. So in order for that to happen, they would want a nice correction, right? Create a base over here, a lot of support, and then they're going to do endless stimulus and UBI, and that'll just keep pushing the stock market higher and higher, and fundamentals will not matter until inflation is so high that inflation itself just destroys everything and destroys earnings and everything, right? Because at some point when the inflation is so high and everyone loses confidence not only in the system but the money itself. Okay, so the public has already lost confidence in the system. The next system to fall is the financial one, the big one, right? This is the big one. And the way that'll happen is 1 week you go to the store, and then a couple weeks later you go back to the store, and the prices of everything are absolutely noticeably higher. And that's because nobody's working and producing. People are just getting, free money, which will not be free. There's always a cost, right? Like these social media companies, right? It's free to get on the platform, but then, was it? No, you were giving away your data to be used, later to sell you things or to be used to, I don't know, control you. In this case, when they give you the UBI, right, Universal Basic Income, it's going to come with a caveat. It's going to come with like maybe you'll have to take all the injections. And I don't know about you, but keep your Babylonian square money, right? I don't want that. Because at the end of the day, I mean, listen, they're building robots, and you guys, I know everyone doesn't believe, oh, that's still like 10, 20 years off. No, it's not. No, it's not. It's already here. Amazon warehouses have like all crazy kinds of robots. You're no longer needed, all right? Just get over it. There'll be self-driving. There'll be warehouse robot workers. It's just no need for all these people. That's how they see it, and I kind of get where they're coming from. So I'm just keeping it real with you guys. So there was a taper tantrum because Powell talked about tapering their bond purchases, which is, they say things all the time. He probably just said that so the dollar would stop falling, right? By the way, this is the newsroom, links below this video. So he backpedaled on that today, and that's just the trap they're stuck in. What else can I talk about? All right, let's go to Bitcoin real quick. Oh, energy. It's been exploding. And I bought back into this in spring. I already took profits back here a little prior before December. And, commodities have been just taking off. Probably because they're starting to price in infrastructure spending. That's what it really is. And inflation. Now, which is both the same thing, literally, because they have to print to do the infrastructure, build out, spending, whatever. Um, Again, there's going to be a decent correction, even in these. It'll be short lived, it'll be temporary. When the FANG stocks here in the equities market has a correction from the yields on bonds going up. So, and I think that'll possibly be a good buying opportunity for oil, all kinds of things, from natural gas, but mainly oil. And where's the corn? Where's the Bitcoin? Do I not have the chart? Okay. Actually, where's Tesla? My last video was good. I just I took it down because the intro I had a video, and everything's being everything is under a microscope, and I didn't do anything wrong or anything. It's just I showed a video of an event for a few seconds, right? Just as an intro. But you can't even do that anymore. Again, this looks ridiculous. It's on 13 sell on the daily. Let's take a look at the weekly. This chart is ridiculous. It's on a 9 sell on the weekly. So Tesla, the fact that it's in the S&P 500 now, when this thing falls, it's going to take the rest of the market as well. Okay, let's... Alright, I'm going to take a look at Bitcoin. Here it is. I usually have my charts ready to go. It's just that I was having issues with my software. For some reason, people don't understand this chart. If you don't understand this chart, then you're noob. You don't know what you're talking about. Like those guys freaking out in the comment section of trading. Oh, 4,000! Oh my god! He's like talking about this red arrow that I put over here. And I literally wrote right here, unknown. They might ban private cryptos or stable coins. Time unknown. It's an unknown. They're gonna do it, or probably at some point. Oh, look. Look who's talking about it right now. This switch. Routers. Bitcorn has conducted some funny business and some interesting and totally reprehensible money laundering activity. ECB President Christine Lagarde. Yeah, like, and maybe they're just saying these just to cause a correction. Or they do probably plan on doing it, but later when they have their own central bank crypto coins ready to go, but they don't yet. Unless they want the Chinese one to rule the world, which is possible. Probable, actually. So maybe they're ready to ban it. I don't know. And this is why I put this huge red arrow over here when I posted this. And people were freaking out about that. Well, now you understand why. But if they don't for the next, I don't know, year or two, yeah, I still expect a correction. I mean, there's major support down around 19,000, maybe a little bit lower, and it should go there, Bitcoin. And then, we'll get a dead cat bounce, maybe some sideways action, and then as they keep doing more QE, UBI, or, money injections, helicopter drops, Bitcoin will probably go back up and, I don't know, go to 100,000 or whatever later. But right now, it's a little overextended and it just needs a nice hardcore correction to punish all these FOMO buyers and these greedy pigs. Because that's what you people are. You're greedy. You just want it to go to 1 million right now. So you could buy boats and Lambos. And that's not how the market works. The market likes to take your money, especially for the people who are not patient. Now, Google Trends and all that, the retail investors really aren't back in it yet. This is mainly two things I believe personally, which is like institutions and the stablecoin exchange. That's also about to get like rated, possibly. I'm not sure, by the feds. So maybe when they rate that, that's what finally give you that nice correction. But anyways, right now everyone's like, oh yeah, Bitcoin begging like the last bull market did 30% corrections, and then it just bounced right back up and went even higher. This is normal by the dip. Well, I think this is going to be a bull trap, if anything, and I'm gonna stick by that for now. Now, if it goes higher, then I'm just wrong. And then, that's fine. I can't always be right. And I'll admit I'm wrong. Okay, there's nothing wrong with being wrong in investing and trading. It's all about when to admit you're wrong. That's what matters. That's the difference between taking a small loss and losing everything, is knowing when to admit to yourself. Because a lot of people are probably just buying right now and buying and FOMO buying. And then it's going to correct, and then they're just not going to have any money to buy the correction, the dip. By the way, the 4 hourly here, I mean, it's on a sell signal. Looks like it's about to dump right now, to be honest. And yeah. Alright, I think I've gone long enough. I'm not going over an hour. What else can I talk about real quick? That's pretty much it for now. I think I covered everything I wanted. Smash some likes. Go to my website. To join the private group if you're interested in mining stocks. I do have a crypto that outperformed, did very well in the past few weeks. Where is it? Let's see how high it went. So since December 20th, or no, December 8th, it's gone up 600%. And it went up 600% by, within under a month, by December 31st. And now it's corrected again. Did a 600% and made a new all-time high, actually. So, yeah. It's the real Bitcorn. It's the real one. It's Satoshi's real visions. Alright, guys? Alright. So join the private membership. Go to my website. Links below. Check out all the links. You're going to have to find me on other platforms. I don't know when, but in the end, the only thing that's going to be allowed will be cat videos and, who knows what degeneracy. So, don't be lazy and find me on other places. Most of you are lazy. That's why most of you are poor. So you guys won't. But for you diehard people, find me. Stop being lazy and find me on other platforms and hit all the links. Go through all the links and whatnot. All right, guys. Until next time.